Hey traders and investors, it's Serge Berger here. We're going to take a look at today is the biotechnology sector. We need to revisit this sort of high momentum industry, really because it can quickly infect other types of higher momentum and volatility stocks. So through a long-term lens, you can see obviously a stock here at some point uh, early this year just basically got into too steep a slope and too long a rally without a real sort of mean reversion move. Now we've had this mean reversion move. It's really sort of make or break for the medium term for the IBB, which is the Nasdaq Biotechnology ETF that I tend to follow, and I think it's a really good barometer just to sort of measure what the mood is like in biotech stocks. So if we just kind of revisit some of the basics, we obviously broke an important sort of, near to medium term area here last about a month ago actually, after systemically breaking below the 50-day moving average and the 100-day moving average, and then ultimately came down to the 200-day. And as I've discussed in the past, that's a pretty key level. And so, not surprisingly so, we bounced off of there after faking a lot of people out that went short underneath there. That's what tends to happen. And then we rebounded like 10, 15% in a very quick fashion here in the middle part of April. And I think now we're finally getting to a point again where risk reward for a trade period is again getting better. So if you are in the business of taking swing trades that last anywhere from on the low end a few weeks to more likely a few, I'm sorry, on low end a few days to more likely a few weeks, then I think finally things are getting a little bit better here. So basically, you have defined a defined line of resistance that comes in somewhere near the recent highs here, somewhere around 235, 236, something like that. So if we were to break above there, I wouldn't be surprised if this IBB can start rising back towards 250. Alternatively, and that's of course the risk off scenario, and this would certainly spill over into the broader into probably more sell off in the Russell 2000 and some of the technology sectors. If we were to break, I suspect we probably need to break something like the 217 to 215 area, which as of right now is not far away. It's like 2 to 4% away, which for this index is not much. So I'd watch out for something like that 215, 217. Again, this is not an exact science. If it was an exact science, a lot more people would be successful at this. But we need to kind of treat it as an art, map out some reference area. So again, if I were to the things I'm looking at right now, 215 to 217, roughly, that's sort of the area I'm looking for. If we can get a daily close below there, I think we're gonna go lower. And the good thing is, if we get a quick reversal, bullish reversal, if below there, and then we probably have a bullish case setting up once again. So that would be what I'm looking for right now. Hope this makes sense. As always, if you want to follow my real-time trade alerts, you can go to thesteadytrader.com. Portfolio is still up a little bit over 11% year to date. Otherwise, if you have any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Take care and have a great weekend.